despite a decent performance for U.S. equities over the last year or so, the market is still a difficult place to be. Volumes continue to be down. Market structure is a big question with some of the technological glitches that we've seen. So more and more money managers are looking for opportunity outside of the U.S., and that's even kind of difficult. So we're going to dig into that a little bit today and find out where some opportunity might be and then how to access them. Joining me to talk about that today is Marcus Martin, Head of International and Emerging Markets Execution at JonesTrading. Marcus, thanks for coming by today.
Thanks, Greg. I appreciate it.
So, as I said, we know what sort of the U.S. market situation is. There are obviously other areas of opportunity for money managers. One of the areas that comes to mind, there's a lot in the news these days, is Europe.
Right.
Macroeconomics are kind of dicey over there. What's your view on Europe and that as a potential for money managers?
Well, you're absolutely right. I mean, volumes have basically dried up globally in all developed and really all international markets as well. So
right.
The U.S. investors are having a difficult time finding what they need in the U.S. and abroad. Europe is actually a fantastic place right now to gather resources.
Okay.
In fact, a lot of very legitimate asset managers are moving into Europe to play the contrarian play, setting up offices, starting to look at more on the private equity side, looking at certain places where they can make very large block transactions. So rather than a lot of the ones and twos that you're seeing trade, a lot of this is either over the counter or it's in different types of formats in terms of the execution,
right.
But they are large blocks transacting. And I think one of the interesting points about it is European countries are obviously developed countries, most of which, and they have a very, very depressed asset level at the moment.
Right.
And so it gives you a great opportunity to actually go in and find value. There are a lot of places in Europe where you can find value now.
Okay, that's interesting because all you hear, the headlines are always bad, right? Break up and the euro's going away and all this stuff. So from a contrarian standpoint, that's very interesting. Now, beyond Europe, Marcus, clearly emerging markets, frontier markets, that gets a lot of discussion. But are those areas where there are opportunities as well?
Absolutely, I definitely believe so. I mean, at the end of the day, the non-dollar investor, a lot of U.S. clients who have a global mandate,
right.
Maybe a decade ago, the risk reward in investing in some of these emerging markets did not look the same. Today, obviously post '08, and given a lot of the issues, that, if you want to call it balance sheet issues, that Western countries have, and this is not a new story, but I think a lot of U.S. global investors, U.S. investors looking globally,
right.
They're now bypassing the likes of sometimes Japan to go to Korea. They're now bypassing the likes of obviously working in their own backyard to go to Brazil.
Right.
There's a tremendous resource boom still in some of these countries, and in other parts of the world there's a tremendous middle class boom, infrastructural plays. There's a lot of ways in which you can play these emerging markets, and some of them are still just as liquid as some of their developed European or otherwise other regional counterparties like Asia as well.
Yeah, that's a good question. So there are opportunities there, and you mentioned there is the liquidity, because that would be my next question would be, so, okay, there's opportunity there, but if I'm a portfolio manager, am I going to be able to access those assets and be able to make those trades?
Absolutely. It varies market to market, and I think one of the concerns that a lot of U.S. investors have had with this acceleration of high-frequency trading in the U.S. has been the lack of liquidity outside of sort of the blue chip or bigger names.
Right.
And oddly enough, that's where you are finding value. You're seeing a lot of small and mid-cap asset managers growing and actually increasing their assets. And that's almost how you would want to look at this investment in the emerging market space. Below maybe your top several names that will make up pretty much most of the index, you do have an investment world of hundreds and sometimes thousands of names depending on country.
Right.
To access that, depending on country, there are additional requirements at times. A tremendous amount of these countries are listing ADRs and GDRs, and to access the local lines, there is some work that needs to be done, but it's certainly not impossible. And at the end of the day, you're still trading stocks.
And that raises another good point, Marcus. Is it better as a portfolio manager? I mean, presumably I would want to actually invest in those companies as opposed to an ADR type of vehicle, right?
I would say so if you have the expertise and the interest in doing so. Bearing in mind that there's currency exposure really whether you're investing in the ADR or the local line. The additional complication of investing in the local line for some asset managers becomes the actual physical currency exposure and settling of the currency or even on the local market.
Right.
One way around or to help that is through an ADR, and in certain other instances there are platforms like ours actually that offer you access into a lot of countries where you wouldn't necessarily have the access previously.
Okay. Now, and that's my final question is just that. So you're heading up sort of international emerging markets for JonesTrading. You know, JonesTrading is known as kind of the high touch, you know, sort of facilitator, if you will. So when you're talking with clients, I mean, what are you doing, and what are you talking to them about, and how are you kind of helping facilitate that activity?
The model fits perfectly with what Jones already does, because Jones is a small mid-cap block trader.
Right.
Jones accesses liquidity in names in the U.S. that are illiquid, have a very you know, extremely volatile profile. That's the same thing that you're doing in the emerging markets, particularly beyond the first several stocks.
Yeah.
So when you look at the composition of most of these indexes, as we already said, you see a couple names at the top, the rest are illiquid. It's the exact same process. What we're doing is employing all of our relationships in these countries globally, and we're finding liquidity sources in places that most U.S. brokers haven't even gone to.
Right. Interesting. Okay. Good. Well, I appreciate you coming by and sharing with us not only, you know, where you see the investment opportunities, but kind of how folks can actually take advantage of those opportunities. So thanks for coming by, Marcus. We've been joined by Marcus Martin, head of emerging and international markets at JonesTrading. Thanks for watching.